Hey everybody, Jeremy here, coming at you for the Sunday Market Bias Update Report for April 28th, looking at the trading week ahead. Last week we were down at the lows. I said we were overextended to the downside, and it made some sense to see a reprieve rally come back up to the decreasing 20-period SMA and the 50-period SMA, both of which may act as overhead resistance and slow down price action to the upside. We have now gotten that. We got a doji candle here just under resistance on Friday. And now on Sunday open, just opening right there, consolidating underneath these two moving averages. Those moving averages also equate to previous horizontal support and resistance from back here in late February, early March. So that is kind of a important price level right around 51.65. That is kind of the line in the sand that the bulls have to get back above to signal the resumption of an upward trend. That is not my base case. My base case is that this resistance zone holds this week and that we either see some consolidation in a fairly tight range here, getting pinched between this decreasing 20-period moving average in blue and the rising 9 EMA in green, or we see prices break lower below this rising 9 and see a retest back down into the lows down here, probably around 5,000 to 5,040, somewhere right in there. The 5,040 number comes from this weekly chart. If we zoom in a little bit, basically we can see this 20-period SMA on the weekly chart has acted as support the last 2 weeks. It makes some sense that if we break down from current price levels that we will retest that and see if that support holds once more. But if we back this out, the last time that we had a significant correction in the market within this larger bullish uptrend, we ended up retracing back down from tip to bottom about 11%, and 10% is considered a standard correction within the market. So going from the high price here set a few weeks back, if we go back down somewhere around 10% or 11%, that puts us in right around the 4,800 to about 4,750 zone. And coincidentally, that also equals roughly the all-time highs from our previous bullish run. So this should act as some form of horizontal support. It would not surprise me at all if we do break this 20-period moving average, which is currently at 5,040. If we break below that 5,040 line, my next line in the sand is somewhere down here right around 4,800 to 4,750. So that's kind of the zone that I am looking at. And honestly, if I had to bet one way or the other here, my guess is that this low breaks and we do end up coming back down and testing that 4,800 level. Now, that level will likely take several weeks to play out. So this is kind of a conversation over the next month, month and a half, somewhere in there. In terms of this week, again, I am guessing we are probably going to see a few days of consolidation and then maybe a pullback down into the 5,000 to 5,040 level, somewhere in there. If we do end up reclaiming the 51.65 level, the next price point to watch for would be up around 52.75. But honestly, with everything going on geopolitically, with the inflationary concerns, with the uncertainty in the Middle East, with the earnings reports that are all coming out here in the next week or two, that is a hard scenario to see develop. And my base case, again, is lower prices in the near term. If we go out to the NASDAQ, you can basically rinse and repeat everything I just said. So looking at different levels, we would need to reclaim basically the 18,100 level to the upside for bulls to really step back in with any significant buying. My base case is probably that we are going to break back down below the 17,600 level and retest this red line in the sand from previous support. That kind of lines up with 17,000 to 17,200 within that kind of zone right here. So that's kind of base case for NASDAQ. If we go out to the Russell, This has been consolidating while quite choppily underneath resistance. Any bullish action that does come in this week, if it does, we'll probably find pretty quick resistance up here at 2050. And likely will roll back over significantly from there. If we do get any kind of a breakout here, my base case again is probably neutral for the next few days as we start this week, and then potentially a rollback over and a retest back down here around 1930, around the 200 period moving average. Going out to Dow Jones. Dow Jones is firming up a little bit more here on support than the other ones. This is likely due to all of the big dividend payers that are housed in this area of the market that investors tend to flock to in times of uncertainty. So this will likely hold up a little bit better than the rest of the market just for the next few weeks here. But if the rest of the market rolls over and goes lower, it likely will too. And we are below moving averages of significance on the weekly chart. My base case is likely coming back down into the 36,800 to 37,000 zone over the next month and a half, somewhere right in there. But on short term, probably seeing some neutrality this week unless there is some kind of big move in geopolitical issues over in the Middle East or some kind of inflationary data that comes in. If we go out to Bitcoin, it is having a really hard time getting back above the 20 period SMA on the daily chart. It has failed that repeatedly. We are now actually breaking down below the 50 period moving average and signaling potential downward movement still to come. If we toss this out to a weekly chart, we're also violating the 9 period moving average. Now, if I zoom in here, we have violated it the last 2 weeks, and then we had buyers step back in and buy it back up. So this isn't super different. We are opening kind of the same distance higher than that 9 EMA that we did the last couple of weeks and then threatening below it. You can only do this so many times before a support level gives out. And my base case is that this will likely end up giving out, and we will probably see a pretty quick retest of the 60,000 mark and may see as deep as about 56,000. If we do get a retracement back down into that 56,000 zone, that is where I will become most interested in starting to buy the dip and looking for potential reversal signals to start building a position once again. But until we get back above the 20 period SMA, currently where we are, I just have no interest in anything below that line. And that is currently just above 66,000. So let's call it 66,200. But anyways, yeah, my base case is heading lower, at least back to 60 and potentially down to 56,000. Going out to crude light. This one's an interesting one right now because I do have an overall bullish thesis behind oil. So longer term, over the course of the year, 6 months from now, that kind of time frame, I do see us being higher. But right now we ticked the moving average that is above us acting as resistance, this 20 period SMA on the daily chart, basically to the penny on this wick. Couldn't hold it, came right back down. We're violating the 9 now. Now it looks to me like we're due to come back and pull back into this 50 period moving average one more time and see if that holds. So that is my base case, and that is right around 81.65. And if we toss this out to a weekly chart and zoom in a little bit, 81.65 would be a little bit lower than the 9. So if we do get below that and close below it and don't get a bounce at that level, that actually might signal further downside risk, potentially down to 80 or 79. So those would be the secondary levels to look at. But like I said, longer term, looking at this from like a 6-month perspective or longer, I do see us moving higher. All right, now let's go out. Let's check out gold real quick. Pretty much the whole market, guys, is just sitting right underneath the 9 period moving average, and the 20 period moving average isn't a great look, not terrible. My base case on gold is that we probably consolidate neutral here for the next several days. And then if we do have an increase in inflationary data, or if we do have an increase in conflict in the Middle East. Those would be the two things that might impact this and create a trade breakout to one side or the other fairly significantly. But right now, until we break down below 2,300 or up above 2,365, there's really nothing to see. Those are the two lines in the sand that I'm tracking. So until we get a break one way or the other on this, it's kind of a nothing burger. Finally, let's go out and look at UUP, the US dollar. We have been stuck kind of trading sideways in a range just below 29 and just above 2870, so 30-point range here. If we do break below 2870, that would be helpful for the US indexes that we just covered and support maybe more stabilization in the market. If we break out above 29, that will spell trouble for the market and will increase the likelihood of seeing that 10% correction come to fruition in the S&P and the NASDAQ specifically. So finally, let's go out and check our heat map real quick, and then we will go out to our economic data. So right now you will see the heat map looks a little different from what it normally does. I have it selected on here to show us earnings dates. And if we scroll down slightly so you can see the key, down here you can see anything that is highlighted in this bright pink color is the companies that are going to be reporting earnings in the near future. The slightly darker pink is 15 days out, and then the dark pink is 30 or more days out. So we really want to be focusing on the bright pink squares. You can see coming up in this week and early next week, we are going to have Apple, AMD, Qualcomm, Amazon. Those are all high profile names we need to be careful of and keep an eye on. We'll see LL Lilly, Pfizer, you have Coca-Cola, and honestly, outside of the tech ones like Amazon, Apple, AMD, the other ones that I'm most interested in seeing are going to be these over in the oil and gas space because, like I said, I do have a bullish longer-term bias on that. I'm really interested to see how the oil and gas energy does through earnings season. So I'm going to be keeping a close eye on the oil and gas sector there. Finally, last but not least, going out to Forex Factory and checking out the economic data coming at us this week. We have a jam-packed week this week. Not only do we have some big names reporting earnings like we just covered, we also have a whole slew of important economic data coming out. So nothing to note on Monday. Tuesday, consumer confidence will be important. Wednesday, we have all sorts of things that are going to be important, concluding in the federal funds rate adjustment, if any, and the FOMC statement. I am assuming that we are going to hold firm at 5.5 again. There's very, very little chance of an actual rate cut. And honestly, probably a very, very small chance of a rate hike, if any. To me, it makes sense that we hold firm again at 5.5. So that shouldn't be a huge mover one way or the other, but the FOMC meeting and press conference where Jay Powell will actually tell us forward projecting on what the Federal Reserve is thinking, that could move the market significantly. So be careful around trading on Wednesday. Thursday's unemployment claims will be important. And then Friday, we have several more important data points coming out, including average earnings, non-farm roll, employment change, unemployment rates, and ISM services PMI data. So a stacked week. This just means tread carefully. And if you aren't already in positions, this might be a good week to go on vacation and not establish new ones unless you were doing short-term day trading, taking advantage of some of these news releases. But in terms of establishing new positions, this is probably just simply not the week to do that. Anyways, I hope this helps, guys. As always, let me know if you have any questions. Hit me up in the comments, and I will help out in any way I can. Take care.